Welcome to Jill on Money, powered by The Compound. I am your co-host, Jill Schlesinger. I'm joined by my executive producer, Mark Talercio. It's the first time we're in this studio since the results of the election are in. And Mark, we have just gotten slammed with questions about people saying, what should I do? What sector to buy? How should I prepare? The euphoria, the fear, all of this. And
wait, what are you talking about? What election?
Oh my God.
Was there an election?
Yeah,
I never would have known.
Unshocking. I really want to take a deep breath. So ready? Okay. Take a deep cleansing breath.
Look at that.
Yeah, I'm very yogi-esque. Remember when I meditated for those 5 minutes? I did get into the meditation thing for a minute, but then it got so stressful for me. So, Mark, these are huge transition moments, right? And oftentimes we are asked by our viewers and listeners, what do I do now? And inevitably, I keep coming back to my tried and true, after you take a deep breath, the reality is the next 4 years are going to pass quickly. And most people are not investing and managing their lives for just 4 years. We are looking at decades in the future. And I would suspect that our particular viewership on this channel skews a little bit younger, maybe than our radio show, even our podcast. And how do we fight the urge to jump in and do something around this?
The best advice that we always give people, especially in a moment of transition, whether even if it's someone passes away, any other of those circumstances, try and do nothing. Like that's like the best course of action is most oftentimes doing nothing. Resist the urge.
And it's very difficult to predict short-term outcomes. So, for example, a number of people have said to me, like, Jill, what's going on? Like this whole idea around tariffs. What should I do to prepare for that? Okay, well, maybe if I were a small business owner that imports a lot of stuff, I might put all of my orders in right now and try to get as much stuff in. But for normal consumers, I guess there is this idea that if you had to buy a washing machine today, or you were going to maybe do it next year, maybe I would try to do that or before the end of this year. But, generally speaking, we don't know what tariffs will be. We don't know what's going to be impacted. And chances are the thing that you want to buy, there'll be an alternative to that thing. Now, the other piece of this is that I think people want to jump on which sectors will do well in a Trump administration.
Can you tell me?
Well, what I can tell you is you can sort of see the investor bet that's on the table, right? Lighter regulation in highly regulated industries is going to be a positive. So what are very highly regulated industries? Let's think about it. Banking and finance. Okay, everything's already up already. Okay, so calm down, gang. You might have missed it. Number 2, energy. Number 3, big industrials. Any other, maybe pharmaceutical, except that this is a potentially administration that might be at odds with the pharmaceutical industry. But highly regulated industries tend to do better under an administration that wants to pull back on regulation. Doesn't mean there's going to be no regulation. There is going to be an SEC. There is a regulatory regime at the Federal Reserve. Like all these things are going to happen. And these are global businesses usually that have to participate. So I think it's always best to really focus on my long-term game plan. And that long-term game plan, you can go check it out. It's like, what am I trying to save for? What is my retirement number? How do I get there? And what is the easiest way to invest in order to get where I want to go? Mark, what is the easiest way to invest to get where you want to go?
Auto investing?
Yeah, and index funds or index exchange traded funds. And yeah, okay, I get it. There are exchange traded funds that you want to play with and you want to have some fun. That's right. That you want to jump in and jump out, take some little sliver of your portfolio, put it aside. You might call it your fund money account. Your fund money account could be maybe 10% of your total invested assets. It would be great if you think you're such a fantastic picker of these assets to do it with a retirement account so that you don't run up tax liability. By the way, if you're really stinky at it, you don't get to deduct losses either, but okay. But if there's something that you want to do and you want to actively trade, go for it. But your hardcore long-term investing is really best suited with a passive approach. Guess what? We just interviewed someone from Dimensional, DFA. These funds, they've been studying the trends for 40 years. The numbers are astounding, Mark, that we can look at these 40-year time horizons and we see how few active stock pickers, active fund managers beat the index against which they are measured. It's insane, right?
Very few.
Very few, and you don't know which ones they're going to be. And they're different ones every year.
So I think the main takeaway for me is that prior to election day, you had a game plan. After election day, you should still be sticking with that game plan.
Exactly. And by the way, the only time to alter that game plan is not with the election results. It is when your life changes. So if there is a birth, hey, I got to open up a 529 account for my kid. If there is a death, oh man, I just inherited millions of dollars from great Uncle Seymour. Aren't I lucky? There's extra money here. Maybe there is a marriage. Maybe there's a divorce. Your life is what alters your long-term financial plan.
Speaking of life, do you know what will happen the next time a president is elected?
What?
I will have turned 50.
I think we should end on that note. That is so depressing to me. Mark.
It's been a long time, Jill.
Welcome to the FU 50s in 4 short years. For everyone else out there, if you're tempted to make some sort of move post-election, get in touch with us. Hey, maybe it's a good move, but maybe it's not. And try to refrain from being the person who thinks you know where things are going. You know what? Throw your hands up in the air. Be like Warren Buffett. You know, when Warren Buffett wrote that letter to his family, to his heirs, and he said, hey, when I die, put 90% of the money in an S&P 500 index and 10% of the money in government bonds and go to sleep at night. Good enough for Warren? Good enough for you? Certainly good enough for me. Again, if you've got a question, go to jillonmoney.com, click the contact us button, write us that note. You can leave a comment here. You can let us know other topics that you want us to discuss. As always, we thank you so much for watching, and we'll see you next time.